Hello and welcome back to a very chilly London. The UK High Street has had a tough couple of months with a number of big names going bust, leaving thousands without work. I've been speaking to Mike van Dulken from Accendo Markets about UK retailers and also the latest unemployment numbers. Let's start with the bad news first. We've seen a number of high street closures recently.
Yeah.
Were they just poorly run businesses or was it indicative of weak consumer spending?
I think it's a trend that we've been seeing over quite a while. I mean, if you look back a few years, the number of shops that have gone into administration, disappeared from the high street is quite extensive. I mean, lately the list, H&V, Blockbuster, Jessop's and Comet was probably the biggest one. Is a shock, but nonetheless, I don't see it as the death of the high street, more of a change, a rebirth. The way we shop now has fundamentally changed. The examples we have, certainly with Comet, is people using it as a showroom. Go in, have a look, be sure that's exactly what you want, go home, price comparison site, find the best price, buy it online, have it delivered home. Don't even need to touch the product between seeing it and actually taking delivery of it. So I think that's one of the big reasons we're seeing the change in the high street, and eventually I see us ending up with showrooms which more money is spent on, they're fancier, brings back a bit more of the retail experience in the shop, but we'll end up still buying things online and making sure we get the best price.
Sure. So how have retailers generally fared during this earnings season?
It looks to have been a mixed batch. There have been some who've done extremely well. Names such as you mentioned earlier, ASOS, Associated British Foods, its brand Primark, has indicated that people are looking at price points quite carefully. You know, the consumer squeeze is quite significant. The middle income people are looking down to save money. So brands like that are doing well despite not having an online offering. ASOS is doing extremely well, I think helped by the fact that having something delivered, even if it's the wrong size or colour, it's not a problem having it sent back, changed or even reimbursed.
Sure, so let's focus on some good news. The UK employment data has come in and it's pretty good.
Very good this morning. The rate has dropped 7.8 to 7.7. The number of unemployed has key number fallen below 2.5 million. Last month was good because we were very close to that level. We've actually dropped below. But back to the bad news, unfortunately, wages growth is still well below inflation, so that, as we mentioned, consumer squeeze carries on with the poor UK consumer having to struggle to stretch out what they're earning on a monthly basis.
And something else which has happened today is David Cameron's speech about the EU. He's going to hold a referendum. Do the markets really care about that? I know it's a very politically sensitive issue.
Oh, it is. It's certainly for something like sterling, and we did see it strengthen a little. I mean, the speech is key in that it's a message both to the UK and to Europe. Standing his ground, wanting to get the best deal for the UK. His message to the Europe is he wants to make sure it's beneficial to Europe too. However, working out which it's angled more to. I mean, politically for him, it's the strength of saying I'm going to put forward for a referendum in if I get re-election in 2015 is a very strong statement. I still think Europe would struggle without the UK. I know we're not in the Eurozone. We are in Europe, the European Union, and the Union itself would struggle without the UK being fundamentally attached and to be on its doorstep. It would have to remain a trade partner, prices would change, things would likely become more expensive. If we could be divorced totally, then again we have benefits from being linked so heavily. You've got the Euro, France and Frankfurt offer big financial centres, trying to be in competition with London, struggling, hence the introduction of this Tobin tax on financial transactions. The UK fought against it. We already have stamp duty, but we don't want to affect our financial centre by things like that. So there are plenty of arguments, and I can see this going on for quite a while longer. We did have the German finance minister come out, echoing in some senses Cameron's statement, making the point that Europe would no longer be the same place if the UK drifted to an exit, as Cameron said. So I think it has big impacts for both sides.
And just to finish off, there has been a general run of bearish news. Do you think we're marching towards a downgrade by a number of rating agencies?
Potentially, but I wouldn't be too worried if it did materialise. We've had downgrades elsewhere which haven't had the big impact because they're flagged at such an advance. The ratings agencies tend to be laggards in reacting, and if anything, the rules on holding X, Y or Z in terms of rating quality, rating grade quality in portfolios, I think has had to change on account of so many countries in the Eurozone failing those rules. So I don't see a big impact there. But certainly Friday's GDP data for the UK, potentially negative for Q4, maybe even opening the door to that triple dip recession is certainly not the nicest of news to have to deal with at present.
Well, that's all for the moment. Stay tuned for an interview with Miles Eakers from Savvy Trading, but for now, goodbye.